Good morning, guys. It's a lovely Thursday morning, and today is the 23rd day of July 2026. And this is what we are looking at yesterday. This was our analysis for yesterday. We were looking for potential sales below this level. We never got confirmation for the sales. The sales were never activated. And for the buys, we were looking for, we also looking for high risk sales below this level for the people with high risk appetite. And the reason I call this high risk is because you can see, let me show you on the 30 minutes time frame. The reason I call this high risk is because you can see that we had a fair value gap here, this fair value gap here, and you can see if you had taken this trade here, price just tapped into the fair value gap, the fair value gap held, then price just continued pushing up. Okay, so that's the reason I call this high risk. The safest sales would have been here once it had a break of structure here. Once it broke this was the last break of structure we had. So once we had the market shifted here, this would have been the safest place to pick your sales from. So that's why I say this is high risk, and you can see the risk involved. We had a fair value gap here. Price didn't even get to this level here. Just tapped into the fair value gap, then continued pushing up. For the potential buys, we were looking for potential buys above this level. This candle closes a very good momentum, bullish momentum. You can see the size of the candle, very very long body, very small wicks. This signals good bullish pressure, and this was a signal that the market wanted to continue pushing up. But our level, this is the level I was waiting for a retest. It was never it was not retested until around 8 p.m. I believe, yeah, 8:30 p.m. The reason I didn't take this trade, we had Trump giving a speech at 10 p.m. Uh, this was about what you call it, the Trump accounts. And whenever this guy is speaking, you never know what he's going to say. So it's it's a safe bet to just stay out of the market. During New York session, whenever Trump is giving a speech, safest bet is just to stay out of the market. Yeah, because you never know what he's going to say. And whatever he is going to say might move the market. Okay, might cause spikes in price, volatility in the market. So the safest bet you can take is just staying out of the market. But you can see also we didn't get the rejection here. uh, what you look for is a retest rejection, then pick your entry. You see, we had no rejection here. Price just came, continued pushing down and down and down and down, and this is where we are right now. So had you gotten this retest and a rejection before right about this time that Trump was about to give his speech, then this would have been a good buy, take the market up. So yesterday was another no trade day on gold. So let's see what we have today. Remember, even no trading is also part of trading because one, you've protected your capital. Two, you've avoided losses and unnecessary headaches on your part. Okay. So now let's look at what you have today. We look at what you have today. First thing, the fundamental calendar. What do we expect today? We had an employment change and unemployment rate on the Australian dollar. Uh, that is already passed. It was at 4:30 a.m. Then we have data coming out on the euro, the main refinancing rate, and the monetary policy statement. That's at 3:15 p.m. So if you trade the euro pairs, watch out for this. Mm, watch out for this data that is coming out at 3:15 p.m. Uh, and also at 3:45 p.m. you have the ECB press conference. So this is a red folder news. This is a red folder news. So uh, high probability it's gonna cause volatility in the market. That's why it's a red folder. Okay, so if you trade the euro pairs, just stay out of the market. If you don't know how to trade these fundamentals, just stay out of the market. Or if you're in a trade right before this data comes out, you could bring your stop loss to break even or close the entire trade or just stay out, whichever suits you. Okay, so on the USD, we have the unemployment claims. This is medium impact, and it will be coming out at 3:30 p.m. Okay, so that's the fundamental outlook for today, unless you get any breaking news regarding the war on Iran and US. So that could also cause volatility in the market and spikes in price. So let's see. Trump, US does not need the Strait of Hormuz, Venezuela working with the US to produce oil. You see, it was 9 hours ago. This is what Trump said. Iran, if our security is not ensured, no infrastructure will be safe. This is what Iran had to say 11 hours ago. So when will this thing between Iran and the US end? US Iran suggests peace talks aren't imminent as attacks were then. See, the attacks are still on, so watch out for any breaking news that could cause jitters in the market. So that's all for the fundamentals. Now let's dig into the charts. We do our top-down analysis as always. We begin on the 1 month. Is the reason I begin on the 1 month is to cover the different types of traders we have. We have swing traders, we have position traders, we have day traders, we have the scalpers. All these traders are within this community, and so I'd like to take to cater for all of you. Okay, that's why I start my top-down analysis on the 1 month. So on the 1 month, we have our one monthly resistance up there, and the monthly support is down here. On the weekly, we have our support down here, and the resistance is up here. Is our weekly resistance, weekly support. On the daily, we had this break of structure here. This is a swing, but we had this internal structure here that was broken. So before price gets to this resistance here, first it has to break through this resistance here. Okay, so this is the most immediate resistance on the daily. On the daily, that's our most immediate resistance. The support, our daily support, we still have it down here. This is the daily support down here. Okay, jump down to 4 hours, and on 4 hours we're still within the same. We've been within this consolidation for the longest time, since 19th June. Since 19th June, the market has not broken above or below these levels. So once we have this break of structure here, we had a break of structure here. Once we had that break of structure there, then we had the change of character here. Break of structure, change of character. Then this is our 4-hour low. This is the structure now. This is our 4-hour low, and this is our 4-hour high. We have not broken above. That's our 4 hour high. This is our 4 hour low. So on 4 hours, these are 4 hour. Wait a minute. Our 4 hour resistance is up here. That's our 4 hour resistance. 4 hour support down here, and on 4 hours, you know what to do. If you've been following my analysis on 4 hours, I like to bring this support and resistance levels to the where the body is close, and then identify this week as targets, and then bring this one to where the body is close, then identify this week's as target. Okay, so that's where we are. This is a 4 hours, and this is a daily. This is a daily resistance, 4 hour resistance here. So we jump down to 1 hour. So all this here, once you had this break of structure, change of character, so all this here until price breaks above this level here, or breaks below this level here, all this we call it consolidation. This is just price moving sideways. It's just price moving sideways. But on the lower time frame, you can see we had a bearish leg here. Now then we got a shift. Now we are in the bullish leg here. Okay, so we jump down to 1 hour, and now on 1 hour we look at the most recently broken structure, and that would be this structure here. We didn't have a break there, so this would be the structure here. Is the most recently broken structure on 1 hour. And our resistance is up there. 1 hour resistance is up there. Our 1 hour support is down here. So this is the range you're operating it in on the 1 hour. We had this break of structure here. Market pushed all the way up here. Then left this low here. So this is our confirmed low, confirmed high. Okay. We jump down to 30 minutes. And now in 30 minutes, let's look at what we had. We had on 30 minutes, we are looking at, we had this break of structure here, then another break of, what is the break of structure here? Yes, the market came and pushed down, wicked up. There's this break of structure here. Then we had a market shifting here. We had the shift here. Then after the shift, the market came down, another break of structure, then another one here, and another break of structure here. So this is the most recent break of structure. Once you have this break of structure here, that's the most recent one. And that brings us to this level here, which we had another and a shift came around here. So we have this resistance here and our support down here on the 30 minutes. So this is what I would do on 30 minutes. Bring this one to the body there, then identify this level, potential buys. So this is, let me explain this. So this is what I mean by potential buys. So if price were to break above this level here, the next liquidity that it would be attracted to. Remember, liquidity acts as magnets to price. So if it's gonna sweep this, if it sweeps this liquidity and closes above, the next immediate liquidity it will be attracted to will be this liquidities up here. There's liquidity above here, and there's liquidity above here. So that's why these are targets for price. And on the lower side, if it sweeps this liquidity below here and breaks below, closing with the body, potential sales below, and breaks below, closing with the body, then the next immediate liquidity you're going to be looking uh, at these levels down here. But the structure, 30 minutes is still on the same place. So this one's, I think, the best. Is let me see how many pips are this. Is 249 pips. That's tradable. That's tradable. I mean, that's tradable. So here, if we get a break above, we could be looking to if we get that break above there, could be looking to push price all the way up there, and stop loss just below this level here. But if we have some good bullish momentum, then we could push price to this level here, or even up to this level here. This is a 4-hour resistance. We could push price to that level there. So this would be a TP1, TP2. Let me show you. This would be our TP1, TP2, TP3. Okay, that's if we get some good bullish momentum, bullish pressure. For the sales, I would be looking to take sales from, I know this is where the structure is, but this area is very minimal. How many pips is this? That's 60 pips, very small. So what I'll do here, let's get rid of this and this. I bring this resistance to the body there. So if we get a candle closing below this level here, is where I take safe sales from. This is where I take safe sales from. If we get a candle closing in some good bearish momentum below that level, then this is where I take the sales from. Take the sales from there and target these levels here. Is this there's liquidity down here. Just target the lows, target the lows, target these lows. All these lows have liquidity lying below them. Okay, but I like to view my targets on the 4 hours. So given this bullish leg here, I would like to target this level here. As price comes to mitigate this structure here, remember there's a breakout structure here. So as price comes back to mitigate this structure here, I would be taking my profit here. Whatever price does after the mitigation, that's up to it. Okay, that's the farthest I'd be willing to take that trade. For the buys, I'd be looking for price. We have this breakout structure here. I would be looking for a break above. If you get a good break above this level here, push the market to this level here, And if you get some good momentum, push it up here. So happy hunting, guys. See you tomorrow for a recap on the same.